Greetings, I'm Greg Moss and welcome to Accounting 101 with the Odoo open source platform. If you like this video, make sure you click below, like, and subscribe, and click that little notification button so you can get notified when I release new videos. So Accounting 101, what this is really for is for anyone who's wanting to learn the basics of accounting in today's modern computer age. I'm not going to go so far back as try to teach T-ledger accounts and things like that. We're going to learn how that you can actually put to work the accounting principles that you'll need to do business today. Now, I'm using the Odoo open source platform. These principles are going to work with any accounting system, and in Odoo's world, it's going to really apply to any version of Odoo 9 and up. They've used the core Odoo accounting framework that's in here now. Now, if you have the community edition, you're not going to really be able to do some of the things, that's now taken out, and it's now just a part of enterprise. That said, contact me, odooinnercircle.com or odooclass.com, and I can help you get accounting reports and the basic accounting functions inside of Community Edition. So right here, we're going to just start with a fresh Odoo database. You can go to runbot.odoo.com and on runbot.odoo.com, you can work with an installation of Odoo without any setup or installs and test out some of these things yourself. So right now, this is what you're going to see if you install a blank database in Odoo, and with the accounting application. So I've installed just the accounting application. Again, this is Odoo 14. And of course, we would get into accounting by clicking accounting here. And again, we have just a blank dashboard. There's no transactions in here. There's no demo data. This is starting right from scratch. And we're going to walk through the basics of accounting using this Odoo platform. So probably the easiest way, I think, to understand accounting is to start with some very simple transactions that we can all understand. So I'm going to come up here under customers, and I'm going to go to invoices. So now an invoice is obviously when we bill a customer. So hopefully most people understand that when you create an invoice for a customer, they're going to pay you money. And so we're going to come here and create an invoice. And it's going to give us a number automatically, and you'll notice that it's given us the year and the month and a sequence number. And I'm just going to come in here and say Bob Sacramento and create and edit this customer. Now, we don't have to do a lot in Odoo. We can just actually decide whether an individual or a company, and for now, just hit save. So that creates us a new customer. I'm going to make a product, and let's say we're going to sell a consulting service, and I'm going to create that service right here. So that creates us a product on the fly, and a label here, and this is inconsequential to accounting. Now notice here though, however, it says account and it gives us product sales and we have a number. So this is the first really indication of something to do with accounting. And we can see the account number and the product sales. Let's go ahead and do this for $100, just like that. And we'll take off the tax just to make it a little simpler, because if we have the tax on, that's going to actually create another transaction or another journal entry. And we'll explain journal entry soon. So I'm going to save this. Now, just like in a lot of systems, if you have drafts of invoices or drafts of sales orders or drafts of anything, there are no transactions created yet. So before we confirm this, I'm going to go up under here under accounting, and I'm going to come down here to journal entries, just like this, and I'm going to take off miscellaneous. And I'm doing this to show that even though this hasn't been created yet, you'll notice that we have a $100 draft status that it's put in our journal entry. So we can see that this is like a potential journal entry here. And if we click on it like this, we'll see that we just get our invoice. So now let's go ahead and actually turn this draft here that's not paid into an invoice. So I click on this and I hit confirm. And at this point, entries in what are called the journal have been created. In this case, they've been created in the sales journal because this is a sale. And so we're going to go back up here again to journal entries, and I'll take this off. And you can see that now that this has been posted. And I'll click on it, and again, we get our invoice to journal items. We can see exactly what has happened on the accounting side. And so this is really the beginning of the 101 part of accounting. So accounts receivable is money owed to you by your customer. And so in this case, this is saying that customer in accounts receivable owes you $100, and so this account has been debited. So accounts receivable accounts, you increase them by debiting them. Now here in the sales account, and you can see it has its own unique number, and it's labeled for this purpose of this invoice consulting service. We have 100 in the credit side. So when we're talking about income accounts, and so this is an income account because it came and it was because of income coming in here, we now have a $100 credit on our income account. So income accounts are increased by credits, accounts receivable accounts are increased by debits. And this is just the one transaction. These are the two entries that are in our journals, and that's all there is to it. There's no magic here. You just have to understand accounts receivable is going to hold the balance of what people owe, and the income account is keeping track for us how much money and where it came in from. So just to get a little bit more understanding so we can see the differences, what we're going to do now is we're going to register a payment and actually pay this. So we click register payment, and it has a bank journal. So that means that when we register this payment, it's going to record it in a journal that keeps track of all those payments through the bank. If it was a cash payment, we could switch to cash. And so this is a way that each journal can keep track of which asset account the money is going into when you collect the payment. And so it automatically defaults to 100 here, and we're just going to go ahead and click create payment. And at this point, we have actually entered another set of journal records. And so if we come back up here to our accounting, click journal entries, remember we have to click off miscellaneous. If we don't, it's only going to show us journal entries that were entered outside of like the sales journal and purchase journal and those things. So when I check this off, notice now we have two main entries, and we have, of course, our customer invoices posted up here. And then now we have another $100 set of journal entries here. And you'll notice that we have our invoice reference, and the journal now is bank. And so I click on this now and click on our bank journal, and let's see what has happened here. Notice that we have an outstanding receipts account that got hit here, and it shows the customer payment of $100 and the $100 debit here that comes in. So it increases outstanding receipts. So our receipts are $100 here debited. And notice now that on accounts receivable, we've credited $100. And remember in the previous, when we did the invoice, we were debiting 100. So when someone pays, it's going to credit accounts receivable. When we enter invoices, it's going to debit accounts receivable. And then the outstanding receipts now is where we're keeping track of basically this money that's sitting, technically maybe in the bank. It's in there, but we haven't reconciled that yet. We haven't gone through the process where we say, okay, now we want that. So that's what, this is outstanding receipts. And a lot of times this would not be the case. At this point, a lot of times you maybe would just have your money, as soon as it's paid, is already represented in the bank and so forth. So that is the core understanding of how debits and credits offset each other through invoices and payments. So now let's understand it a little bit from the purchasing side. And so if there's any confusion, you're going to start to get it a little cleaner now. So let's come up here to vendors now and issue a bill. And this, of course, when you have bills, this is you buying things. So this is a company, or if you're running this as an individual, which you theoretically could, when you purchase things, you're going to create a bill for them. And so I'm going to come up here and say create. And you can see we got a bill here. And now we are specifying the vendor. And I'm just going to say Acme Products like that. And we will create an edit. And just like before, we don't have to fill in any of this to continue for the purposes of accounting. And we'll come down here to our product. And because of, just to keep things kind of simple, we're going to order something different. So we're going to say office chair. And it could be anything that you would purchase for your company, for your business. And I'll create that office chair. And notice now that it defaults to an expense account. When we were doing invoices and billing customers, it was defaulting to income accounts. Now we have an expense account. And we're going to have a price. And this time, let's do a $200 office chair. So we'll at least know when we're looking at our numbers, we're talking about the purchase now instead of the invoice that we did. And I'll hit save, and I'm going to take the taxes off again. We'll do one with taxes before we finish this up. And I'll hit save. And remember, just like before, this is in a draft state. You're not going to actually have them in the journals posted until you hit confirm. So we're going to go ahead and hit confirm. And now when we come back up to accounting, journal entries, and take off the miscellaneous, we'll have 3. And notice we had invoices, bank, and now vendor bills is represented here as a negative. So, we bought $200 worth of things. I would say right now, tip number 1, ignore this total right here. It doesn't really represent anything to us because of the way that Odoo represents these totals in here and how they're coming through. So this, don't think, oh, this is 100 and this is 100, and so this is minus 200. That means we broke even. You haven't broke even. Or you owe $100, you're down $100. So ignore this total. Let's come to the vendor bills and see what the journal entries look like. So again, this is just the invoice line, but when you go to journal entries, notice we have an accounts payable now. So anything where money's coming in and customers owe you money, that's accounts receivable. Anything where money is going out and you owe money, that's accounts payable, things you have to pay. And so what this is saying, we owe $200. So to increase a accounts payable account, you credit. To increase an accounts receivable account, you debit. So it's just the opposite. Because we're paying out, we're crediting our accounts payable $200. And notice on the expense side now, to keep track of our expenses, we have a $200 debit. And this $200 debit offsets, obviously, the credit in payables. So this is going to sit in accounts payable until we pay for this chair, just the same way the $100 sat in accounts receivable until the customer paid. And you should be able to guess right now what happens to at least accounts payable when we pay. So pause the video and at least, try to understand what's going to happen here when we do accounts payable. So once again, we can pick the journal of whether it's a bank or a cash, and we're just going to leave it bank, and we're going to take the $200. And at this point, we've created that payment entry. Just take a second to go up here and look at what the important accounting 101 reports are based upon these simple transactions we've already done. I'm going to bring up the first one, the profit and loss statement. And we can come in here now and look really clearly and see what has happened. We have operating income of 100. And if I open this up and we look at it like this, we can see that our product sales account is showing $100 that we got. And notice here, there's no accounts receivable, there's no bank accounts, there's nothing to do with balance accounts on your profit loss statement. Profit loss statements are only looking at your income and expense accounts. And you can see that here, that we had our $100 operating income. It gives us our total here. And then finally we got, our total income, $100. Next, we have our expenses. And you can see there's those expense accounts that we got hit. And you can see here, if I expand this out now, I can actually see the journal items that went with expenses, and you can see there's our office chair. So you can drill in to these reports. It's very nice. And you'll see that our total expense is $200. So our net profit here is minus $100 because we spent $200 for an office chair, but we only got $100. So that's the profit loss statement. That's why I explained to you the difference between balance accounts and income and expense accounts, because on our profit loss statement, you only have the income and expense accounts. So now let's go over and look at our balance sheet. And now our balance sheet is kind of the opposite. A balance sheet looks at the balance accounts. In this case, because we've kept it simple, is accounts receivable and accounts payable. So if we look over here under assets, we can see we have minus $100. And we can open this up and we can see why we got to that. We have outstanding receipts of 100, so we've made 100. And we have outstanding payments that we owe money minus 200. So we have a total current assets of minus 100. This is the balance sheet showing that we have minus $100 in our assets. Now, if we scroll down here below, this is where we get into the accounting piece. That's like accounting 101 as well. As you'll notice that right down here, we have this equity section, total equity. And what equity is for, and what we want to understand here, is that when you're doing accounting, at least in the United States and a lot of other countries as well, a company has owners. In other words, there is an investor in a company. And so any profits or anything that comes out of that company is technically owed to the investor. And that is what is known as your either unallocated earnings in this case, because they have not been allocated. And then once they have been, and you settle up and you say, hey, this is how much money we made, then they can go into retained earnings. And that's where anytime the company makes money and all the income and expenses are settled out, that income now could be, it is owed to technically it, and from the standard accounting principles, that money belongs to the owners. That's the equity. This is sometimes called owner's equity in the company. And right now, because the company owes $100, that means the owner of the company, the equity, the people that purchase, they owe $100. So from an accounting 101 standpoint, how do you show the investment of someone that starts a company? So we're going to show that journal entry right now. So it kind of hopefully gives someone very new in accounting a way that they can kind of understand these core principles. So let's come back up here to accounting. Let's go to journal entries, and let's just take that miscellaneous off so we can see what is there now. And I'm going to hit create, just like this. And this is what you would probably use a miscellaneous journal entry for, is because we're saying, hey, this is not a sale, it's not a purchase, it has nothing to do with that. This is us putting money into the company to start it. And so I'm going to come down here and we're going to say, was it equity? And I'm going to look at the whole list so that I can make sure and get the best account that would represent this for us. Now, all of these things are going to go, and I would use this one right here. So notice how it says capital equity, just like that. And so I'm going to go here to capital equity, and that is basically capital and money that I have put into this company. And capital, because it's an asset account, actually, this would be most likely a credit here on owner's equity, and we'll know for sure later. And then what we want to do is put that money in our bank. That we have this money, we took it from somewhere. Doesn't matter where. Could have been from a 401k. It could have been you saved it in a shoebox. Doesn't matter. And we're taking this $5,000 and we're saying it came from somewhere and we're putting it in the bank. Just like that. And I hit save. And I post. And now we've had a $5,000 credit of capital that this essentially, when it comes in here, is what the business owes the owner. And we're going to see that when we come back here to our balance sheet, and everything gets settled out here, and this should make everything hopefully clear. We've put $5,000 into the company, and through that, capital here, it went into our bank. And look at this right here. We have in our bank now, we had 5,000, right, when we put it in, but because of we got 100, but we spent 200, so we really are down 100. So that means we have $4,900 in the bank. And if we come down here, we can see that our retained earnings and what is owed now technically to our equity in the company is $4,900. So this number here is for right now matching this number here. The money in the bank is exactly the same as what is owed to the owner of the company. And we can see our liabilities plus our equity is $4,900. Now, we have no liabilities, but let's think for a second, pause the video. How would we create a liability? Well, a liability is any payable that we haven't had a payment for yet. So let's just, as we end this, if you understand everything so far to this point, then you can probably, go below, click like and subscribe, and, in the video. But if you still want a little bit more clarity, here's how we can do that. I'm going to go here to vendors again, and I'm going to create another invoice, and we can just use Acme products again. And I'm going to add a line. And let's say we need another one of those cool office chairs. They're really neat. Maybe we get a discount. It's only $180 this time because we're buying a second one. I will leave the tax off for now. We might do one with taxes right before we close. And I'm going to just confirm that. I don't have to hit save. And this now creates a liability because it's an accounts payable. And if I go back here to our balance sheet, we will see now that we have this $180 liability that's sitting there waiting for us to get paid. And everything we purchase for our company until we pay it is a liability to the company. If we paid this $180, as soon as we did, it's going to drop off. Now, what's important to notice here is we still have $4,900 in assets, right? That's sitting in the bank. We have that. But now notice that our owner's equity is now down to $4,720 because it knows that we're down $280 now. We're not just down $100, we're down $280, and therefore our equity in the company is down to $400,720. That this company, according to this very simplified balance sheet, is worth $4,720, even though I put $5,000 into it. Now, let's do just one with taxes on the customer side so we can see how that would work. And it's just going to add basically another account to the equation is all it's going to do. So one thing we can do in Odoo is we can click on this and do action and duplicate, and it duplicates our previous invoice so we don't have to fill all this out, right? But we can come in here and add a tax, and I'll add that 15% tax, and you can see that takes us to $115 that it's going to cost the customer. We're going to get 100 of that. $15 of that it needs to be tracked to turn over to the government, and we're going to see how that is tracked using accounting here. So I confirm this, and notice our journal items are right here. We don't have to go there to that other screen to see the journal items. I can click on them here, and notice what happens. The customer owes us $115, right? Because they owe the whole amount. The sales part of that goes into our income account, our sales account, is $100. And then we have $15 that's in this tax received account right here. And then what we want to do right now is just see where this $15 lies on our balance sheets. So if I come here to balance sheet like this, you'll notice that this $15 is a liability right here, tax received. So taxes are a liability, meaning that anytime you sell something, you owe something. You sell something for $100, you owe 15%. You sell something for $200, you owe 15% of that. And this now is kept in this liabilities account right here. And if we clicked on this so that we could drill down into our journal items, I'm going to click on it so we can see this gives us a real detail of our journal item, exactly how much and we can see here it's a credit. So it was a $15 credit. So we now know, as we've always known, remember, accounts payable is a liability account. Tax received, it's a liability account. All liability accounts are increased by credits. All asset accounts are increased by debits. That's how I knew when I created our capital investment. I knew that had to be a credit because the bank account is an asset account that I'm putting the money into, and that's a debit account. So once you understand these principles, accounting is not hard. It's just basically taking the time transaction by transaction to understand which accounts are debited, which accounts are credited. There's lots of resources out there, and I hope that this helped you understand a little bit of how all this fits together. And if you're new to Odoo, or you're a developer, someone who's not really strong in accounting, that this is clarified things somewhat. So hopefully you liked this video, and if you did, please please subscribe below, and leave some comments. And obviously this is just a very basic cut. If you're really serious about Odoo, please check out odooinnercircle.com or my training site, odooclass.com, and I have courses there on accounting. I have a full Odoo Essentials course that will take you through all of the accounting pieces in a lot more depth than what I can just go through here. So many thanks for watching. I'm very excited about Odoo and Odoo 14. I think it is certainly one of the best platforms out there for accounting and for starting your small business. Thanks for watching.